Good morning, everyone. I'm Vince Lancy. This is the Gold Fix Market Rundown. It is 7:27. Today, later on today, we will have several items for you. The first one, in no particular order, I should say, is we're going to put out a special podcast, why you do not celebrate, why you do not sell your physical, but you must consider taking some profits. If that seems like a contradiction, well, you're going to have to listen to figure out what we're talking about. We also have a slew of insights from different banks that all seem to be telling people to get long precious metals at the same time. This is not bag holding, our opinion. What we're going to do is, because everyone's busy and they have other fish to fry right now, whoops, there we go. We're going to put out summaries, too long didn't read breakdowns for these essential reports later today. Those reports are Citibank, silver to $150 with $300 on the radar. They said that explicitly. Bank of Montreal says $220 by 2027. Goldman Sachs and UBS's targets have been hit. No updates from them yet, but it's getting close. They both had 5,400 for their target. And SEB, a very important energy and grain European Nordic bank, starts discussing precious metals. So there seemingly is a lot of interest in banks raising awareness on precious metals right now. I can't imagine why that would be. Well, actually, I can, but I'll share that later on, or I've shared it many times here before. Let's go to the home page. Last night, we sent out a special message to Goldfix subs. We were getting a lot of calls, a lot, right? We were getting a lot of text and messages saying, thank you, I hit a home run, X, Y, and Z. And my response to everyone was, it's not yours until you take the profits. How do I take the profits? Well, let's talk about that. So I put that repeated message in that post and sent it to everyone. A lot of people on the free side probably don't understand the context of what I'm saying. I understand that, but we'll talk about it later on today for premium subs. Lower right-hand corner, opinion. Germany selling gold is strategically and tactically very inadvisable. Bloomberg op-ed out yesterday or today saying that it's not a bad idea for Germany not to repatriate its gold, but to sell some of its gold. That's not advisable. You do not sell your physical, and we'll tell you why in this conversation. Let's start with the markets. 10-year yields are unchanged offer. The dollar is up 1. The S&P 500 is 69.93 up 6. The NASDAQ is 26,067 up 24. The VIX is up 25 basis points. Gold spot 55.40 up 125. Spot silver 119 and change up to 90. Gold in Shanghai futures 56.41. COMEX futures 55.59. And the spread between COMEX and Shanghai is 12 on the silver side. Silver 119 in the COMEX and 131 in Shanghai. My target is 144. And I said I would sell if it got there. I already sold. I already hedged half. I'm not going to do it. I'm going to leave it in. That's my problem. Copper up 33 cents, 5.6%. WTI up $1.25. Natural gas up 11. Palladium up 18, turning. That was negative recently. Platinum up 59. Gold, silver steady at 46. Grains are up. And I had to demote crypto. It's there. I just had to demote it. Bitcoin is 87,788 minus 1,300, and Ethereum is down 77. Okay, let's pause this and let me get my thought. We'll cover the charts and last night's activity in a second. All right. We also opened a room last night for everyone to see charts. I know a lot of people were having some problems. All right. So the story that we thought we had everything covered this morning, and then Rudy, a founder, sent us this link, and it kind of tweaked us a little bit. So our opinion, Germany selling gold is strategically and tactically very inadvisable. Germany's gold reserves have surged in value, reviving debate over whether they should be sold to ease fiscal pressure. While a Bloomberg opinion column argues for partial liquidation, this view, our view, misreads, well, their view, not our view. Their view misreads gold's evolving role. Gold is increasingly positioned as a financing and collateral asset, HQLA, repo, that can be mobilized without sale. At the same time, that's the strategic aspect of it. At the same time, Euro area balance sheet tensions make reserve reduction tactically risky, strengthening the case for retention rather than monetization. You don't have to sell gold at the sovereign level to monetize it. I don't understand where this is coming from. So we put that out. That's unlocked. We strongly suggest you read that because what they're thinking is what you should be thinking. In India, you can take your silver to the bank and get a loan against it. Get a loan against it if you need the money, or take the risk off, which is what I'm advising. Take the risk off does not mean close the position. Okay, moving on. News and analysis. We gave our PM yesterday special message to Goldfix subs, and we opened the founders room. Founders room was open. Right. India and Canada signal energy, critical minerals as pillars of trade reset. UK's Octopus Energy, and founders growing up with a bookie in South Philadelphia. I sat down with Mike Farris from Coffee and a Mic, and I don't know, we just started, I had a couple beers in me, so we started talking about everything but silver, and we ended up talking about how movie theaters, 15-minute cities, Las Vegas is dying, vertical integration, but so hopefully some good insights there. It wasn't just all like bullshit. In case you missed it, I've been told the chat is fixed. I've communicated with people back and forth. I've communicated with Substack. Please let me know if that is the case. I'm not sure. Throw a couple texts in the chat, and I'll be surfing through there today. As you can, hopefully, I apologize. I can't be there. I think you understand what's going on. I'm not even doing my shit posting on Twitter anymore. And there are the hats. Well, there are other hats now, but we're well through 5,000. We're well through 100, but we could end up going back there. So I'm not going to put up a 6,000 hat. No. I'm not going to put up a 150 hat. No, I'm not doing that. That's what salesmen do. All right. Let's pause this again and get some bear. Okay, this is the week thus far in an hourly chart. We're going to go through day by day and try and get a handle on what's going on. All right. Sunday, Monday. Essentially flat and down, right? This is the day that I said you want to be short below here, but if it gets above here, you could have a nice rip of $100. Well, we got that $100 here. That's on, what day of the week is that? Tuesday or Monday morning. Market runs up. This is an algorithm buying, or what you would hear when someone says it's a buy program. That's when I say it's a market maker algorithm, right? Another pause, get the bearings. Now we're into Fed day. Last little bit of buying is done. Everybody goes to their neutral corners and waits. Fed starts. Fed is, I could be wrong, okay? But the Fed is a non-event. Dovish pause, questions dodged, made people perhaps think that Powell was going to leave sooner rather than later, and you lose a sane voice on the board. Not just leave as chair, but leave the board itself. I'm not sure. But he gave the impression, I think, to some people that he's just going to leave altogether and just say, fuck it, I'm out of here. And so gold starts to ramp. You're saying, well, what was the news? There was no news. The news is this. Here's the news. The news is all this buying here was tip of the iceberg buying that was praying for a dip that they could buy. And when they couldn't get the dip, they said the heck with it, and they got in. Now, this here, this is the reopen. The reopen market goes up. Now, I'm not exactly sure of this, but generally speaking, you know if you're going to get a margin call tomorrow morning at 5 o'clock that night. You know it before 5 o'clock. You probably knew it here. And you said, if you know you're going to get a margin call. And so it's possible, I'm throwing it out there for you because this is how it worked years ago. Margin calls come in, someone covers, and that's it. And these wicks here, see that wick?